When you're done watching this video, I hope that you're going to understand how S Corp taxes work. So what I mean by that is you might have heard of this concept called a pass-through entity, and you might not, really understand what that means, or you might hear it referred to as an informational return. But I'm gonna walk you through an example of an S corporation tax return, show you how the revenue and the expenses work, and whatever's left over, that profit, how that profit then will flow into your personal return, and it's on your personal return where you will end up finding out, do you owe money or are you gonna get a refund? All right, so hopefully at some point during this video, as you're watching, all of a sudden, the light bulb's gonna go off, and hopefully your understanding of this will be crystallized and you'll understand exactly how S corporation taxes work. So before we jump into that, I'm going to share my screen and show you some of these forms so you can get this, understanding. But before we do so, let me just quickly introduce myself. My name is Navi Miraj, and I'm a CPA who helps entrepreneurs usually by creating content on social media and showing them how to implement strategies, right? So how to save thousands of dollars in taxes. So in this video, I'm doing something a little bit different. I'm going to show you or help you understand and teach you how S Corp taxes work. So if you learn something while watching this video, do me a favor and subscribe or follow me depending on which platform you are watching on, all right? With that said, let's kind of jump into what I want to talk to you about. So how S Corp taxes work. So let's have a look at this S corporation tax return together, okay? So on my screen here, we have the 1120S, that's what this form is called. That's the tax return that you would complete for an S corporation. And real quickly, I'll go over the top portion here, but basically what I'm saying is this was the entity that was formed was an LLC. So ABC LLC was formed. This is the address. The date that the LLC was formed is January 1st, 2021. That's not likely the case for you, but I'm just saying, hey, in the perfect world, this LLC was formed on January 1st, 2021. That's when they formed the LLC with the state, okay? In any state is the state here. And also that is when they told the IRS that they wanted to elect S Corp tax treatment. And so they wanted their S Corp tax treatment to be effective January 1st, 2021. So as you can see, this is a brand new company, ABC LLC. It's elected S Corp tax treatment as of January 1st, 2021. All right, that's all that's really important here. I did also check the box letting the IRS know that this is this entity is electing to be treated as an S corporation with the beginning of this tax year. Okay, but what I want to show you is, how this tax return works. Okay, so in this example, I'm saying that there are $125,000 in sales or revenue, whatever you want to call it. Okay. And that's what the total income is as well, 125,000. Now, if this was a company that was selling products, then it may have something called cost of goods sold, right? So if it had inventory and it was selling products, whatever the cost of the goods that were sold, it would reduce, you'd put that number in here, cost of goods sold, and it would reduce that total income figure further. But in this example, just pretend it's a service. So I have a lot of real estate agent type clients. There's other services, could be landscaping or something like that. It's a service-based business, so total income is 125,000. Now let's take a look at the deductions here in this area, okay? So we're scrolling down a bit. And so I'm gonna skip over line 7 for a moment, but if we look at this, line 12 is taxes and licenses. This is not income tax, okay? This $5,000 of tax, I'm just using it as an example, but this would be, for example, Social Security and Medicare taxes for the employees of the S corporation, all right? In other videos that I have on YouTube, you can watch those, but the employer, the S corporation, ABC LLC in this example, is responsible for a portion of the Social Security and Medicare taxes. And so that's a number I just made up. I just said it's $5,000, okay? That's the taxes I'm talking about there. Also, I'm assuming that this business has another $10,000 of advertising expense, right? So that could be social media ads, for example, whatever type of advertising your business does. And then further, we have line 19, which is for other deductions. Normally, as it says here, you would attach a statement listing what those other deductions were. But to give you some examples, that could be, again, if you're a realtor, fees associated with MLS fees or dues and memberships, or it could be internet and cell phone and deducting your mileage for your auto, a little bit of that, right? Those other deductions that are not specifically called out here in items, lines 7 through 18. So you're going to lump all those other deductions together and you get another 10 grand. So I'm just, pretending that there's another 10 grand of other deductions here. So if you add that up, 12, 16, and 19, that's $25,000, right? So $125,000 in revenue minus those $25,000 of expenses left $100,000 worth of profit, okay? Now, an S corporation should pay what's called a reasonable compensation to the shareholder. So let's just pretend in this instance, there's only one shareholder, the owner of the company, okay? And so on $100,000 of profit, the owner decided that $40,000 was reasonable compensation for themselves, all right? That's a whole nother discussion. How much is reasonable compensation? What is reasonable? There's many factors that go into that. I'm just, picking an arbitrary number, $40,000, okay? So $40,000 was the compensation paid to the officer, usually via payroll. All right, but I don't want to get too far off track. Just know that the officer of the company, the shareholder, the owner of the company got $40,000 in payroll or wages. All right, so that's another expense to the S corporation. So now we have $125,000 minus the $40,000 of officer compensation and the other $25,000 of other expenses that were here. So that's a total deductions of $65,000, right? Total expenses of $65,000. So 125 minus the $65,000 gets us $60,000. If you scroll a little bit further down here, line 25, amount owed, you'll see that that's a big fat zero, okay? So you might be wondering like, okay, I thought you just said there's $60,000 of income here. Why is there no tax due? Well, the reason for that is because S corporations and even partnerships, like 99% of the time, don't owe any income tax, okay? They are what they call pass-through entities. So this income, or let me back up, this tax return is referred to as an informational tax return. We're gonna file this with the IRS by March 15th of each year, or we're going to file an extension giving us up until September 15th, but it's an informational return. We're just going to send this information to the IRS, but this information is going to flow through, you might hear that term, flow through entity or a pass-through entity. This income is going to flow through to the shareholder, okay, the owner of the S corporation. So let's take a look at that, all right? So what I have for you on this other screen here is the officer's individual tax return, okay? So I'm just calling this person John Doe. They live at the same place, or their business is, a home-based business or whatever, 123 Main Street, anywhere, any state, 12345 is the zip code, all right? And just assume here that this person is single, all right? And there's no children, there's no dependents, anything like that. And this person's going to take the standard deduction. I'll explain what I mean by that in a second, but that's what their tax return is going to look like. It's very simple. In other words, it's a single individual with no children, no tax credits, any of that stuff. And the only thing they do to generate income is what you just saw with the S corporation. All right. So you remember a moment ago, I told you that the officer compensation was $40,000, and that needs to be run through payroll. So payroll taxes need to be paid. And so the officer of the corporation or the S corporation is going to get a W-2, all right? So this is the $40,000, and let me just show you. The $40,000 in line 7, compensation of officers, is the same $40,000 that's here. It's the W-2 they receive from their S corporation is the $40,000, right? That's income to you. Then on line 8 is the other income that came from the S corporation. So that was, if we scroll down further, that's this ordinary business income is the additional $60,000. So the total income that was mostly or all generated from the S corporation is $100,000. It's the $40,000 of reasonable compensation and the $60,000 of profits that the S corp owner is taking I'll refer to it as a distribution, but it's the portion of the profits that were not taken as reasonable compensation. All right. So that's 100 grand. Now you're going to get the standard deduction here. Okay. So this client is taking the standard deduction, this made up client, and that standard deduction in 2021 was $12,550. So that amount is listed here. And then there's also something called the qualified business income deduction. So the math on this is basically 20% of the 60,000. So whatever income came from the business that was not officer compensation, in this example, $60,000, you multiply that by 20%, that's 12,000. And so that's another deduction that you get to take. And so when you add the standard deduction plus the qualified business income deduction, you get $24,550. So we went from 100,000 of income, we took out the standard deduction, we took out the qualified business income deduction, and now we have taxable income of $75,450. All right? Scroll down a little bit more. The way this works is that taxable income that we just discussed a second ago, that was $75,450. What would happen is that amount of income would sort of flow through the various tax brackets that apply to a single individual, right? If you are married filing jointly, then there's a separate set of tax brackets for married couples, right? But again, in this example, we're just saying this person's single, and as the income flows through each tax bracket, this is the number that you would end up with. $12,347 is the amount of taxes, and in this case, federal income tax, that you would pay on $75,450 of taxable income. All right. So we're going to keep going down this form. A lot of this does not apply to us, but I'm going to say here that when the officer of the corporation, the S corporation, was earning or getting paid the W-2 income, the $40,000, I'm just going to make this number up to make the math easy. I'm saying that they withheld from those paychecks $2,347 in federal income tax. Okay, so the owner of the business didn't get 40 grand, right? He got 40 grand minus some deductions from his paycheck. And so I'm just saying that officer elected to withhold $2,347 from his paycheck throughout the year towards federal income tax, right? So we're going to deduct that, right? They already paid that. They owe $12,347. That's how much they were responsible for. They paid $2,347 throughout the year. So what's left is, right, this $10,000. So your total payments throughout the year was $2,347. So that leaves you with $10,000. All right. Now, there are some circumstances that would trigger a little bit of a penalty here. But, you know, if you filed your tax return and you owed 10 grand when you filed it, chances are you'd pay a little bit of an interest penalty, you know, not thousands of dollars, but maybe a couple hundred on owing $10,000, because you should have paid that throughout the year as you were earning your income. Okay. So that's it. That's how it works. So that's the whole concept of the S corporation. Okay. S Corps, to kind of give you a recap, S Corps, they don't pay income tax. They file an informational tax return, and the profits from that business pass through the entity onto the shareholder's individual tax return. And I just showed you how that income flows through the individual tax return and how you will end up owing income tax. Okay, so the takeaways that you should, you know, have after watching this and me explaining this to you is S Corp tax returns, they're due March 15th. You could file an extension to make them due to September 15th. They typically don't owe income tax, but there are informational return that you file with the IRS. The information from that return flows through into your personal return, and it's on your personal return is where you determine, or how you determine, how much income tax is owed on the income generated by the S corporation. All right, so hopefully that was helpful, and it's clear now how S corp taxes work, and how the taxes, how the profits from the S corp flow into your individual return, and what taxes you will owe. Real quick before I let you go, I want to let you know that, this was an educational video. There's a lot of other videos that are, some are educational, some are not. Some of them teach tax strategies. So I guess that's education as well. But there's more information on my website. Here's my website. It's navimuradcpa.com. There's a course here. I really don't promote this too much, but I do mention it at the end of the videos. If you want to learn how all this stuff works, how taxes work, how accounting works, how to implement all the tax strategies I talk about on my channel, like hiring minor children, the S Corp strategy, saving $58,000 in a retirement account, and on and on and on, you can take a look at that course. You can connect with me on social media here. There's an expense tracker that you can download for free. Just put in your name and email. You could file an LLC or create an S corporation for free by using some of these companies. Just click on there. You'll go to the website and start filling out those documents. You can schedule a 30 or 60-minute Q&A session with me if you've got questions, right? Hard to find a CPA that's available. You can just schedule some time on my calendar. You can email me, and you can watch other content. If you don't want to watch it on YouTube, it's organized here. You can have all my videos, or just categories that I've kind of made for you. All right, so you can see all that information here. So with that said, I'm gonna let you go, but I really appreciate you watching. Again, if you got value, consider subscribing or following, depending on what platform you're watching on. And if you are watching on YouTube, in a moment here, a couple other videos are gonna pop up that I recommend based on the fact that you watched this video. All right, so with that said, I will see you in our next video.